Assalamualaikum Warahmatullahi Wabarakatuh. Hi, my name is Nur Inshira Afika binti Muhammad Yusri. So today I will be the first presenter. So let's start our presentation.
Part A, Question 1. Brief explanation on MFRS 8. So, MFRS 8 is a Malaysian financial reporting standard that explains the accounting treatment on operating segments in a business. So, it requires business to disclose operating segment based on how the management internally organize and evaluate the business. So this means that the MFRS 8 uses management approach in which the operating segment is identified based on the information reviewed by CODM, which stands for Chief Operating Decision Making. So MFRS 8 help users to understand the key activities and environment of a business, and the operating segment, which is reportable, is based on the quantity threshold test, which is the 10% rule. Any operating segment that doesn't fulfill the 10% rule will be disclosed as all other segments. So let's proceed to the next question, which is question 2. The Chief Operation Decision Maker. So the Chief Operation Decision Maker is a person who decides on how resources are to be allocated and is the one who monitoring and evaluating the segments. Typically, in a business, CODM is the chief executive. However, it can also be among the senior management team or the board of directors if they carry out the function of CODM. So usually, CODM is the one who is among the higher level of management. So here are the example of CODM based on Genting Malaysia Annual Report 2023. So you can see at the blue highlight which the financial statements state that the Chief Operating Decision Maker for Genting Malaysia is the Deputy Chairman and Chief Executive and also the Group President and Executive Director of the company. Another example of CODM we can see in the E-Asia Annual Report 2024, which the one I highlighted in green, is stated that the group CEO is identified as the Chief Operation Decision Maker. So let's move on to question 3, which is type of segmental report used in financial reporting. So according to FRS 114, there are two types of segmental report that are used in financial reporting. The first one is business segment. So a business segment is a distinguishable component of an entity that is engaged in providing an individual product or service or group of related products or services, and that is subject to risks and returns that are different from those of other business segment. In a simpler word, business segment is when a company divides its activity based on what it sells. So a company might sell clothes, food, and also electronic. The second type is geographical segment. So geographical segment is a distinguishable component of an entity that is engaged in providing products or services within a particular economic environment and that is subject to risks and returns that are different from those of components operating in other economic environment. So in a simpler word, geographical segment is when a company divides its operation based on where it operates. For example, a company might operate in two different countries, which is Malaysia and Indonesia. So here are the example of business segment report from Ayan Berhad. So we could see in the one that I highlighted in pink, which said reportable segments. So Ayan has disclosed two reportable segments, which is retailing and also property management services. Retailing refers to the departmental stores that they have, and also property management service refers to the shopping mall operation. We can also see that Aon has disclosed both revenue earned from both of the segment, which is retailing and property management services. So the next example is geographical segment report. So we could see the notes to the financial statement is from Gamuda Berhad. So we could see that Gamuda has disclosed a few countries which include Vietnam, Australia, Singapore, Taiwan, and others. This means that their business also operated in the countries that I just mentioned, and it also making a significant revenue. So that's all from me. So I'll pass it to the next presenter, which is Hani. Thank you.
Next, the two key benefits from segmental reporting. By preparing a segmental information report, the business can evaluate the nature and the financial effects from their business activities. For example, the segmental information report that has been prepared by Ajinomoto Berhad, we can clearly see that the business has two business segments, which is consumer business segment and industrial business segment. We can also see that they have the geographical segment, which conclude Malaysia, Middle East, other Asian countries, and others. By analyzing this report, Ajinomoto Berhad can compare the financial effects on which segment is the most profitable to the business. They can also compare the significant difference of revenue and liabilities in each segment from the previous year. Next, by preparing the segmental information report, Ajinomoto Berhad can understand the economic environment in their business operation. Ajinomoto Berhad can decide which segment contributes the most to the environment and make it their main activities of the business operation and focuses more on that segment. The objective of MFIS 134 is to prescribe the minimum content of an interim financial report and to prescribe the principles of recognition and measurement in complete or condensed financial statement. Timely and reliable report will improve the ability of investors and creditors to understand entity's capability to generate earnings and cash flows and its financial condition and liquidity. This standard only applies if an entity is required or elects to publish an interim financial report in accordance with the Malaysian Financial Reporting Standards.
Next, the two significant events and transactions that affect an entity's financial position and performance. The first one is write-down of inventory to net realizable value, NRV, and the reversal of such a write-down. If the company's inventory exceeds its NRV, the company must immediately recognize it as a loss or a write-down. So this write-down will cause the company's asset to decrease and increase in expenses, which will also reduce the profit. The subsequent reversal of this write-down will lead to recovery in market price and increase and reduce the selling cost, which will increase the profit, the opposite of the write-down. So why the company need to disclose this type of information is because to inform user the quality of the earning and to tell the user whether the recovery or the recovery or decline in inventory is a major cause of that year's performance or not. So the second one is the recognition of a loss from the impairment of financial asset and the reversal of such an impairment loss. It is whether the company's property, plant and equipment, its intangible asset or asset that arrive from contract from the customer, and any other asset. If the impairment is if the assets values decrease or decline, so the company need to disclose this information because it will reveal a change in the carrying value of the non-current asset, and also it will affect the statement of financial position because of the carrying value has changed, so the future depreciation or amortization will also change. For the interim reporting periods, we chose company Maybank for our references. So the financial statement that I have prepared is the statement of financial position, statement of profit or loss, statement of changes in equity, and statement of cash flow. So we will go one by one in the next slide. So the first statement is the statement of financial position. Here I include the statement of financial position for the company from Maybank. So the current interim period is as at 31st December 2024, and the comparative interim period is as at 31st December 2023, which is to compare the last year and this year. The next statement is the statement of profit or loss. This is the Maybank statement, income statement. The current interim period is from the 1st January 2024 until 31st December 2024, 1 year. And the comparative interim period is from 1st January 2023 to 31st December 2023. The next statement is the statement of changes in equity, SOCI. So the current interim period is from 1st January 2024 until 31st December 2024, or also 1 year. So the comparative interim period to be compared is from 1st January 2023 until 31st December 2023. So here are the statement of changes in equity for the company's bank. So these are the statement of changes in equity from bank. Lastly, the statement of cash flow. So these are the statement of cash flow for Maybank. So the current interim period is from 1st January 2024 until 31st December 2024, and the comparative interim period is from 1st January 2023 until 31st December 2023.